So last week was a short week as Friday was a holiday. So we'll take a look at Bitcoin, CONY, and HOOY. And then I'm also going to take a look at some of the space stocks that are moving along with SpaceX. And I want to show you an option play that I'm looking at. Hello, my friends, this is Legend. So it was a short week last week. Friday was a holiday and therefore the market was closed. Now, of course, Bitcoin is 24/7, so it does not close and it moves how it wants to move. But you can see that overall last week, Bitcoin was coming down, okay? And this was that close on Thursday. And Friday, since the market was closed, looks like it actually started ticking up a bit on Bitcoin. So we won't see that move up on some of those yield max plays like CONY and HOOY because it was mostly just seeing this part right here. It was seeing Bitcoin moving down. So that, of course, probably brought CONY and HOOY down. But if we can move Bitcoin on up, then hopefully we can move those up as well. Now it looks like Bitcoin ended up breaking back below that 64.7. Was really hoping that we could actually stay above it, use that 64.7, bounce off of it, use it as a support line, and continue moving up. But we did break down below it, and now that 64.7 with Bitcoin, instead of being a support line, it is yet again a resistance line. Since we are below it, now we have to break back through it again. So if we can break back through it again, open and close above that line, then we can flip it right back and hopefully use it as a support line, but only time will tell. So before we take a look at CONY and HOOY, if you don't mind, hit that like button as it would be much appreciated. So let's take a look at CONY. And here we are on CONY. And you can see right there, there's those down days, right, that we were seeing on Bitcoin. We were seeing it on CONY as well. We had a nice pop-up last week, but it did come down because Bitcoin was coming down. But if Bitcoin can turn around and start moving it back up, I'm hoping to see another little pop-up on CONY. Now, if you do look here, you can see right through here, that $20 range could be a possible support line for CONY. Now, I do realize that CONY works off the movement of Coinbase, so it really depends on where that resistance and support line is on Coinbase. But since it does reflect a lot of that same movement, I don't think it's too far off to say that this right here could be somewhat of a support line. And that's right there around that $20 range. So hopefully we can keep CONY above that and continue to have it moving on up. But I really think it all has to do with the move on Bitcoin, which will help Coinbase and in turn move CONY up. But since it has been coming down, you can see that RSI2 is dropping. And that RSI2 ended at about a 25.2. So if CONY can continue to move down a bit and drops below this 10 on that RSI2, I might be buying some more shares of CONY to help lower my real price per share. Now on HOOY, we were showing a bit more of a green candles moving up. And that RSI2 was actually moving up as well. So that's a good sign for HOOY. Don't mind that at all, right? I am down on HOOY and CONY, and if it wants to move up, I have no problem with that. But if it's going to come down, I want it to drop below that 10 so that way I can buy some more shares, help to lower my real price per share on either of those, so that whenever it does start moving back up, it's got less of a gap to fill before crossing over and making my position green. So currently on those two, I did not purchase any shares because neither had dropped below that 10 on the RSI2. But now one of the things I wanted to show was some of these SpaceX and other space category stocks, right? So we'll just take a quick look at SpaceX. And as you can see, there's not really much to look at here as the history is not a whole lot as it just opened on June the 12th. That was the first day of trading. Now it did start moving up pretty quick for the first 3 days, and now it has peeled back just a bit, and I own my shares at $150 per share. I only own about 10 shares, but I'm currently still in the green. Now, I think this one here kind of cooled down just a bit, but I think it's cooling down just to only take back off. Now, of course, that's not financial advice, and I can't tell the future, but that is what I'm hoping for on SpaceX. But with the move of SpaceX, it has been moving a couple of the other stocks that I do have, and that's ASTS and Rocket Lab. So on ASTS right here, you can see it has been coming down a bit. Now, why would this one be coming down? Well, my thoughts are that these other space stocks, some of the investors probably pulled money out so that they can try to get into the IPO of SpaceX. So that money for the IPO of SpaceX for the investors had to come from somewhere. So my thought is it came out of the market of a lot of the other stocks, and even stocks like Google and Meta and everything like that. I imagine people were selling shares of that, grabbing up some of that money and buying into SpaceX. But as you can see, ASTS here has come down just a bit, but my feeling is this one here is going to turn around and take back off. At least that's my plan, and that's what I'm hoping for. And it is currently at a previous support line, as I'm showing here on my graph. I've got that support line at around $77, and we're sitting at a roughly $80 per share. So what I could do is end up selling a put, earn premium, and if it does bounce off of this 77, then I get to keep that premium and I do not have to buy those shares. But if it did break on down, cross over, and I do get assigned those shares, I honestly would not mind owning those shares of ASTS at that lower price. Because if I believe this one here is going to turn around and go back up, then I would not mind owning some shares at around this $70 range, so that whenever it does take back off and it gets back up here to the top around 102 or so, then I can sell a call at or above that range, which would be a good bit above my purchase price if I got them at $70, right? And then I would get to keep that premium. And if those shares are taken away, then I would also make that price appreciation from that $70 up to wherever I sold that call for. And if I sold it at $105, then we would be looking at a $35 price appreciation off of 100 shares, and that would be $3,500 on that price appreciation. And that's not even counting the premium that I made on that sold put and on that sold call. Now keep in mind, this is all assuming that ASTS will eventually turn back around and start moving back up. Nothing is guaranteed, and you definitely do not want to spend more than you are able to lose on anything in the market. But that's one that I'm kind of looking at. I'm kind of looking at possibly selling a put at around that $70 range. And let's just take a look at that options chain just to see what it would actually pay out. So here we are on the options chain for ASTS. That current price being $80. And if I were to sell a put at say 70, and if I wanted to do it for say 3 weeks, okay? So right here, you can see this is the strikes, and that would be for roughly 20 days, right? 3 weeks is pretty close to 20 days. So that's July the 10th. So let's open this one up. And we were thinking of that $70 strike. So if I did a $70 strike, and that's selling a put, that means that I'm willing to purchase those shares at $70 per share for 100 shares per contract. So one contract would mean I would need to make sure I have a total of 70 times 100 shares or $7,000 available to purchase those shares at that $70 strike, okay? But by doing so, I earn a premium, and that premium range is from $264 to $315. And I usually try to get the mid, and on Webull, it does show you that mid price. and that mid price was at about $2.90. So what kind of percentage would that actually be if I were to sell that put on that day at a $70 strike? So let's just go ahead and punch that in on a spreadsheet that I've been working on. And the numbers we're going to enter in and that you should remember are $70 strike for a July 10th expiration date, and the amount of premium that I would earn, we're going to go for that mid price of $2.90. So let's just go ahead and enter that in, and let's see what kind of percentage that would actually make us. And here's that little spreadsheet that I was talking about, and I'm just playing around with this one at the current moment. But this is where I would enter in those numbers, okay? And I also have this up here to show what monthly projected percentage that I'm actually looking for, okay? I would like to get about 3% per month. Of course, if I get more, great. If I get less, that's fine too, but I'd like to shoot for a goal of 3% per month. And that's the projected, okay? Not necessarily what I got, but what I am projecting hopefully to get for a full month if I were to trade that for the full month. So we're going to use the Thursday close date, and that's on 6/18. We would normally use the Friday, right? But Friday was a holiday, so we're going to use that Thursday date of 6/18. That ticker symbol is ASTS. That does not affect this calculation, but it's just to show what that ticker symbol was. Now that expiration date, if you remember, was July the 10th, and that strike was a $70 strike. And if you remember, that premium that we were looking at was that mid price of about $2.90. Now, how many contracts? Well, that depends on how much you want to put into it. But if we just did it for one contract, that would mean that I would need to make sure I have $7,000 available for that purchase if I was assigned those shares. But will this option play right here? Will this meet that 3% monthly goal? And if I put in one contract, it'll finish doing the calculations and we will find out. And as you can see, does it meet the goal? Yes, it does. The actual projected monthly is closer to about 5.5%. That is great, right? That's great. Now, if I did let this one go all the way to expiration and I capture that full $2.90, that would actually earn me 4.14%. A very nice gain, right? That's the actual percentage that I earned on just this position or this play in itself. But if I were to project that out for a full 1 month time period, that would be worth an estimate of 5.48%. But since it does meet that goal, if I did sell this put and I let it go to expiration, that 4.14 would be what I would actually earn for that position. But if I only wanted to shoot for that 3%, then at any point that option would drop and that premium drop to below $1.31, as you can see right here. If that premium were to drop down to $1.31, where it's currently at $2.90, if it dropped below that $1.31, I could buy it back and I would earn that 3% estimated projected monthly goal. Say after just 1 week, the stock shot up. Therefore, that premium would actually drop in value because it's moving further away from that strike of $70, right? Because the current price is $80. So if that thing went up to $90 or $100 per share, then this premium here is actually going to drop in value. And if it would drop below that $1.31, I could immediately buy it back. As long as I buy it under $1.31, I would earn that projected 3% monthly goal. That, of course, is my goal. And by getting out early, then if it decided to drop again after a few days, I can do it yet again And that's how to really start increasing the amount of money that you're having coming into your account. Now, of course, this is all taken into account and assuming that the stock moves up. But since ASTS is at 80 bucks, and if it did drop below that $70 around that expiration date, I could get assigned those shares, and then I would have to buy those shares at that $70 strike. Even if the price of ASTS dropped to $60, I still have to buy them at $70, okay? Because that is what my contract states. I am willing to pay $70 a share if the price of the ticker does drop to or below $70 by the expiration date. But like I said, ASTS is very volatile. It moves a lot. And just because if it does drop below that 70 does not mean you will get assigned immediately. You could always get assigned if that price does drop below the strike, but it's not meaning that you will get assigned immediately. But like I said, what the sheet is actually showing you is at what point you can actually get out and still make your goal up here. Now, can I change my goal? Yeah. Well, if I want 4% per month, what kind of buyback would I have to actually wait until it got down to before I can buy it back and still earn 4%? Well, I would need it to drop down to 78 cents or less. And then I can buy back that option that I actually earned $2.90. And if I buy it back for 78 cents or less, I will earn 4% for that position. So this here, once you get in it, you can actually see and put in a buy to close order on that option so that if it does or happen to drop down to that price, it would automatically buy it back, close out that option, and you lock in your profits, right? So that's a nice little feature to have. Not saying you have to use it, but if you did, it could actually get you out of that position as that stock moved up. And then after a day or two, it could actually drop right back down and you can actually do this yet again. And if you own the 100 shares, then you're just on the other side. You're selling a call, earning premium, and if the shares are taken away, as long as you sell that call above your purchase price, you will make price appreciation, and that way you can't take a loss on it. Now, if you do get assigned those shares and the price of the stock were to drop and just keep dropping, yes, like any other stock, you own those shares at that price, and if that keeps dropping, then you can either sell them at a loss to get out of it, if that's what you so choose, or you have to be patient and wait for it to turn around. But you do have to make that decision because no one knows what the future has in store for any of these stocks or high yield ETFs. So this is one of the sheets that I am going to be trying to get uploaded to my Discord just so that you can play with it. Use it to find out what you could actually buy that sold contract back at to keep within your goal. Kind of gives you that help to know what that buy price could be if you were to try to keep some type of monthly goal for yourself. But all in all, it does tell you what you will earn and what your projected monthly is if you did hold it until expiration to earn that full premium amount. So this is a new sheet. I have not yet uploaded it to the Discord, but I do hope to get it uploaded to give yet another tracking sheet, and in this case, just a calculation sheet to help you decide what you would actually earn if you were to sell a put at a certain strike for a certain ticker. But as always, I do still have my high yield stock tracker sheet that is on the Discord. And for this one, you use it to enter in all of the positions you have to find out what your real price per share is so that you would know if you're up or down in each of your high yield ETFs. And as you can see, I am still up on all except for CONY, SMCY, and HOOY. The rest of them are still green. And if I were to sell out of all of these, not including the distributions for this past week, I would earn $25,000. So if you'd like to get a copy of this stock tracker sheet and eventually get a copy of my sold put options sheet that I will get uploaded soon, then come on over, join the Discord. That link is in the pinned comments and in the descriptions below. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button and smash the like button, as it would be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.